Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Bernie Wasserman, President of Participant Capital, to discuss private real estate opportunities and why they are less reactive to short-term shocks in the market. Bernie, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Pleasure to be here.
Thank you so much. And give us a high-level overview of the private real estate market. Where are some of the opportunities?
Well, today, basically, private real estate, which has been around for a long time, it depends on the strategy that you select. But today, the opportunities continue and have been for some time now in the Sun Belt, just given the growth that we've seen in the Sun Belt over the last decade, and which really was accelerated during the pandemic. And that's something that has continued. And a lot of private equity capital today is focused on this market.
What private real estate strategies make sense in the current environment?
This really depends on your investment sort of criteria and risk profile. Private real estate, which sort of tends to lag in terms of market valuations, the public REIT markets, which can make it attractive for a lot of investors, but the risk profile of different investors is not the same. So if you're more of an income buyer, and large institutions and pension funds tend to favor core value add players, which is buying a fixer upper, tend to be more income oriented investors. And then of course there's distressed and development, which we can call that term an opportunistic strategy, and here you can get the highest potential return that often comes with the highest risk. We're currently in an environment where there's been some dislocations and perhaps more expected given the rise in rates that have been prompted by the rise in inflation, and so there's a lot of money out there that's looking for an opportunity in 2023.
What other risks are there to consider?
The risks really vary in terms of the type of product you're off, your type of strategy you're investing in when it comes to the private markets. But certainly, rising rates and inflation is the one that's most spoken about today. But the fundamentals really always come down to the same thing: location, supply, and demand. And so for us, at our firm, we're very much focused on the Sun Belt and particularly the state of Florida, which is an area which has seen just the spectacular growth in the last several months, not to mention the last 3 years.
What stands out within the Sun Belt?
Well, Florida certainly stands out because of the fact that Florida used to be a place where Northeasterners came to retire. In the more recent years, people are coming here for different reasons. We've got large corporate migration that's hitting our markets, seeking not only a more business-friendly and tax-friendly environment, but a better quality of life. So with the work-from-home paradigm really accelerating during the pandemic, you had a lot of people relocating to South Florida. And that's why Florida has really stood out. I think the major benefactors of that work from home when it comes to the Sun Belt were Texas and Florida markets. But when it comes to Florida, Florida's been a bit more sticky. People tend to come here and stay.
Yeah, well, it's not a bad thing when it's at 32 degrees in New Jersey right now. Any areas to be careful of in the next year?
Oh, I think that if you do your homework and you look at the markets individually, I think that you will tend to do fine. People that have been investing in real estate in more broad-based strategies, more index-like strategies, whether it's public REITs or some of the mega funds, they're going to struggle because we're not in a market like we've seen in recent years, where cheap money really did, finance an expansion that was, without pause. So today we're in an environment that you're going to have to be, much more selective in the markets, and it just goes back to doing your homework. So undersupplied markets like the Miami area, Orlando, and Tampa are areas that are going to continue to benefit from migration, and the opportunity, we believe, is still here.
All right, Bernie, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.